Hey guys, hope you guys had a good week of trading. It was a little bit rough. We ended up coming out on top with a nice profitable week, but man, the last 2 days were really tough trading. Just not a lot of continuation. Very choppy trading. So let's take a look at where we're at here and kind of where we're going next. The biggest thing to look forward to this Wednesday will be the FOMC meeting. We're expected to get a 25 basis point hike. That's pretty much what I expect. That's 70% priced in as of market close. But I think the biggest thing and the most important thing that we should be looking at with FOMC is the dot plot. What is the dot plot going to say? I think, and I've said this for 2 weeks now, even before the bank run started happening, that we're going to see a dot plot that shows longer rate hikes for more than people were expecting. And now market actually is pricing in 100 basis points of cuts by the end of the year. And I just do not see that happening. With all those extra money being put in to save these banks from the feds. And now, yes, this is not QE. And yes, it's technically a loan, but it is still extra money being put into the market. Almost $2 trillion. Is a big deal, and that's going to be really hard on inflation that they're already struggling with. And I think we're going to see Jay Powell be pretty hawkish, and I mean something's got to break, and it's gonna be interesting to see what Jay Powell does. So taking a look at the daily here, basically the biggest thing I want to point out is that we're forming a beautiful bear flag right here. If you see, even going back to February 2nd, we came down here, we had a real nice bounce to right here, hard rejection off 405. We lost 390, found some nice support, and then we retested a breakout, and we just got hard rejected. So with a rejection yesterday, right at the daily 20 EMA and 100 EMA, and then today closing back under the 8 EMA and key 390.1 pivot, I am very bearish, and I am looking for a downside push to 378 area. Biggest thing to note here is that we have this consolidation period that went back to December where we pretty much traded from 376 to 386 really. And that's pretty much where my target is. I think that's where we're going to start breaking down to. And we could pretty much end up in that target area before FOMC. And then what happens on FOMC is going to be very interesting. And I expect it to be a pretty big market mover. But it really just depends on how the algos basically digest. I mean, we could get like before where we get these huge rallies out of nowhere off of FOMC and the very next day give it all back. Or we could just see something like September. Let me see if I can find it real quick here. Yeah, right here, September FOMC, where we just give it all up and it just goes straight down. So it'll be very interesting to kind of see what happens here at FOMC. Take a look at the weekly here. There's not a lot of information, honestly, about where we're going next. The biggest thing I note here is that we had a huge bounce off of December's demand support at 382. We attempted to break through the weekly 8 and 20 EMA, and we were hard rejected off 396.4. And now that we're back under the key pivot of 390.1, my downside target remains 375 to 382. Take a look at futures weekly here. Same thing. We have this really nice move down, a recovery, move down, a recovery, and we're looking for a move down. I mentioned yesterday that we should be looking to put in a new supply resistance at 39.95, and I was also watching for a possible double top to bring us lower, and that's exactly what happened today. And this is very bearish going forward. And we are either establishing a temporary top at 39.95 of the range down to 38.85, or we're putting our new top right here and we're going to see a bigger move down. The trend pretty much, if you go all the way back to the beginning of February, has been down, higher low or lower high, make a new low, lower high, make a new low. My target for futures remains 38.05. And you can see going all the way back here to this December consolidation, pretty much 38.05 to really, I mean, you could go up to 39.20, but I would say 38.95 was our consolidation period. And that's pretty much where we should look to fall back into, is this 38.30 to 38.90 range. Taking a look at futures weekly here, not a lot of information. We just have a big old doji. We have, after a huge breakdown, basically an attempt to break back through the weekly 8, 20, and 100 EMA, and we hard rejected. closing over 39.20 though. So that'll be our big support that we need to get back under if we're looking to target this lower range of 37.70. The biggest thing I see here is the JPM collar is at 40.30, which expires on not this Friday, but the next Friday. And our puts are all the way down at 3,600. For the last year and a half, pretty much I'd say last year, we have pretty much closed closer to the puts than the calls on the collar day. So my downside target really would be 3,600 versus going back up to the 40.20 area. Now, obviously last time that didn't happen. We actually finished a little closer to the calls, but I do absolutely expect some downside. Looking at the VIX here, you really could actually call this a nice bull flag with this breakout, and then we're posting right here, or this is our nice pull with our flag, and then we're going to pop back up with our target being about 28.3. But the biggest thing I want to point out here is that if you look at this daily candle, it moved up, but it did not give it all back. So if you look at the last 5 of trading days right here, besides the red days, the green days, so the days that we had huge moves up on the VIX, you see we have these massive wicks. What does that mean? That means people were putting heavily hedges on to the downside, so downside protection. Remember, the VIX's 28 DTE are farther out. However, what they were also doing is by end of day, they were taking all that off. So they were not staying with their hedges. Today, that changed. People put their hedges on, as you can see, and they did not take them back off. This tells me that there are some people, probably big money, that are very nervous that there's going to be a big downside move. Taking a look at the dollar here, I'm still learning the dollar. Biggest thing I see here is that we're also in this nice breakout triangle here. And we just kind of haven't really seen a lot of movement with the dollar. But I also know with all the bank run issues and everything else that the dollar's probably going to move a little differently. But I definitely am interested in what everybody has to say about the dollar and what they think it's doing or going to do. The biggest thing I see here is the 10-year yield. So this is actually the lowest the 10-year has closed since back here on February 1st, February 2nd area. So something also which goes along with the VIX and the bear flag on SPY is the same thing here. We had this huge drop on the 10-year, and then we had a recoil, huge drop, recoil, huge drop. So what this is telling me is that people are basically flighting to safety of the bonds and then immediately getting out of them. Back to bonds, getting out of them. Back to bonds, getting out of them. However, today, and you can see the same thing, this wick is much smaller than these previous weeks, or days, I mean. People really didn't get out of them. So the 10-year coming down like this, and now some of this probably has to do with the potential for the federal or the Fed funds rates and everything like that, but I really do think that this is absolutely a flight to safety. People are piling into these bonds, especially the 10-year, because they're scared about what the market's going to do. And when they buy in like that, it takes the rate way down. Now, the incredible story here is actually Bitcoin. Bitcoin's up almost 11% on the day. This is the highest level that Bitcoin has been since June 12th. Which is pretty crazy if you think about it, because if we go back to SPY on June 12th, which is right, June 13th, we'll call it. So June 13th, SPY was trading 373 to 381. Now, obviously, they're not perfectly correlated, but I do find it very interesting that pretty much since SPY has started its downside, the Bitcoin has actually found its upside. Now, the speculation, of course, would be people are scared of the banks. People think the banks are going to fail, that the dollar's not safe anymore, and of course, they think crypto is more safe. I think that's pretty foolish. If you look back here over the last year, 2 years of trading now, nothing about Bitcoin is safe. I mean, going back to 2021 right here, November 2021, last year and a half, this does not show me safety. This shows me that Bitcoin is just as vulnerable as the rest of the market is. Now, of course, it could change. We could see Bitcoin, stabilize. We could see it accepted by more people, blah, blah, blah. But with all the regulations the feds are trying to do and everything like that, I really struggle to tell anybody to buy Bitcoin. That's just my personal feelings on it. but I am always curious to watch it. It's interesting to see what it's going to do. So, all right, hope you guys had a good week trading, and I'll see you guys next week.